Hello everyone, and welcome to today's presentation where we're going to be talking about how to implement the same trading strategies at home that institutional investors use. Now, there's a lot of different trading styles, but if you want to figure out what's going to pay consistently the most over time, what you really need to do is look at the institutions. What is Goldman Sachs doing? What's JP Morgan doing? What's Warren Buffett doing? They're going to be implementing the right strategy at the highest level. And the reason they do that is they know that this is going to pay off the most in the long run. Of course, it's not just strategy. You do need to have the right strategy, but it's also the research and time you put into picking the right position to get into. And when you mix the research with the right strategy, the reward can be quite high. Now, at the end of this webinar, I'm going to show you one of our recent research reports so you can see how much effort and time we put into it, but it pays off quite nicely. So at the end, I will give you a real-life recent example of how we take research and then marry it to the right strategy to receive a 90% plus success rate on our trades. So most new traders end up spinning their wheels. They win some, they lose some, and over time, they end up breaking even or winning small or maybe even losing small. But the point is, they're not doing anything to gain considerable wealth. As a trader, I want to win 90% of more of my trades so I can continue to build my wealth and my portfolio. Now, perhaps you've traded stock, and that's a great starting point. But even the best stock pickers only win slightly more than 50% of the time. And that's because with stock, you have to have the direction right and the timing right. If you buy stock, it has to either go up for you to win, or if it goes down, you lose. And let me give you an example. Last year, I did a lot of research on Ford Motor Company. I saw the stock was making lower lows and lower highs over the previous 3 years. They were adding to their debt, and sales were way down. So I saw this was a perfect opportunity for a disaster. So I not only put options on, I also shorted the stock. And in the process, the stock traded higher. Over the next couple weeks, it traded higher again. And it traded higher over the next few weeks after that. It was quite frustrating. I knew the thing was a dog, but it doesn't really matter. If everyone is still buying the stock, it's going to trade higher. So I ended up covering about half my stock over the next couple of months. And eventually, people started to realize this was not a very good situation going on with Ford Motor Company, and the stock got crushed. I ended up breaking even on the stock and having a 100% win on the options. And that's because options give us a little bit of wiggle room in case we're off on either our direction or our timing. Now, some people might have tried to trade options in the past and found that they were a bit confusing or found them frustrating. And that's true for all new option traders. I've been trading options for a long time, but when I first started trading them, I thought they were confusing and I found them to be frustrating as well. And that goes for everybody. If it was easy, everyone would be doing it. But options are not that difficult once you get over the first hurdle. They'll soon start to make perfect sense, and once you start to make money, they become a lot of fun. People spend a lot of time and money on learning a career. They'll go to college for 4 years or for whatever it might be. They spend a lot of effort on making sure they can earn an income. But they don't even spend a couple days on learning how to manage that money once they get it. So someone who learns how to actually manage the money once they have it is going to far exceed the wealth of somebody who just learns how to make money without learning how to make that money grow. Which leads to our next slide of why you should pay attention. And that's because nobody cares more about your money than you do. Your boss doesn't care more about your money than you. Your broker doesn't care more about your money than you. You care more about your money than anyone. So what I want to do is I want to simplify this whole process. I want to show you how to set your own probability of success, what to look for when implementing a trade, and how to execute the right strategy for the right situation. One of the best things about learning how to trade options is that once you know how to do it, It's a skill you can fall back on again and again. It's not something that ever becomes obsolete or goes out of style. It's a skill you can use over and over again for your whole life. And this should be very appealing because there's a lot of skills that you learn and you can only use them for a couple of years and then you got to go on to learn something else. Options is not one of those. Once you learn it, you can use the skill over and over again and you just keep getting better and better at trading them over time. And once you start making money, you'll have more money to work with, and that's when it really starts to become a lot of fun. So we have two goals here. First, I want to make sure everyone has the opportunity to learn how to trade options properly, and we do this by providing the highest quality training anywhere on the net. And you can see on the monitors here, we have 2D animation training, so everyone has the best opportunity to learn, and all of our training is responsive, so it can be watched on the phone, on the tablet, or on the computer. And people tell us over and over again that it is superb. So just recently, we've had a couple of testimonials in, so we just received this last week from Al. Al is one of our new members, and Al says, "Hey Chris, I just watched lesson 1. You really are an outstanding teacher. Your teaching style has clarity, brevity, simplicity, and an occasional touch of elegance." Well, that's very nice of Al to say. And here's another one. "Your explanations of IV masterful in that you explain a difficult topic in the simplest way possible. Like Einstein once said, make things as simple as possible, but no simpler. Chris, I'm glad to be aboard." Well, we are also glad to have you on board. But teaching option strategy is only half the battle. I also want to make sure our members know the exact strategies to implement, but also how to get that research so that they're putting on the right strategy in the right situations. And that's why I give all members full-blown research reports on exactly how we've determined the trade and what elements we're seeing when we execute the trade. So that way they can replicate the same type of strategies when they do it for themselves. And if you're looking at any other option service that doesn't provide full-on research reports, you want to run the other way. There's other services out there that say, hey, here's a trade, do this trade. And if there's no report to go along with it, you really don't know what they've done or what kind of research they put into it, if they've put any research into it at all. They could just be picking things willy-nilly and sticking them out there and being like, hey, there you go. So be very careful about that. You want to learn how to trade options, but you also want to learn how to do the proper research or get the proper research so you can implement the proper strategy so that you can actually win the majority of your trades. And here are some of the exact trades that we've done. These are our last few trades. So you can see here we just got out of EA. That was an Iron Condor, a 3-lot. We held that for 12 days and made 23%. And really, we've won 19 of our last 20 trades, I believe. So you can see here Biogen, 8%, and the list goes on. You can see we had a Microsoft one where we made 81%. That was pretty nice. And the list goes down. And if I go to the next sheet, we see here. So we have one loss in there. We have a SPY Iron Condor that we lost. Now, most of these wins, they're all going to be a couple $100. And the loss is probably about $400 to $500. So you can see here we have a gain of 200, then a loss of $400 to $500, then another gain of 200, another gain of probably 200, another gain of 300, and this really starts to add up quite rapidly. And these are really the contract sizes that we recommend as the minimum. So if we recommend a 3-lot, we have people in our service that do 30 lots. So they'll do 10 times as much. And I know one customer does 20 times as much. So if we're making $200 on a 3-lot, if you do a 30-lot, you'll make $2,000. And we have such high numbers because we put in the time in order to figure out what's happening and how to capitalize on whatever that situation may be. So why listen to me? My name is Chris Douthit, and I have been working in finance since 2000. I've actually been working in finance since 1999, but I started working with options in 2000. I was a lead market maker on the Pacific Stock Exchange for TFM, SLK Hull, and for Goldman Sachs. I have worked as a financial author, and I've been a consultant for high net worth individuals. And I have a reputation for making some of the most elegant trading videos in the business. So I'm not just a teacher, but I put my own dollars to work. And if there's anything I hate, it's losing money. So if anybody's losing money on my trades, I'm in it too. And I hate to lose money, which is why I insist on such a high winning percentage. I have an extensive education in finance. So I have multiple finance degrees and an MBA. So I have the training and know-how to put on the right trades at the right time. So I'm public. If you head over to LinkedIn, you're free to check out that I am who I say I am and my profile in detail. And this is important because there's a lot of people out there trying to sell similar services or even maybe something in another niche who claim to be something that they're not. So you always want to check out the person that's in charge when you're signing up to a new service like this. I have one member right now who looks at YouTube videos and then asks us in the forum, like, hey, this guy is saying this, what do you think? And the first thing I say is, don't get your advice from YouTube. But I said, hey, what is this guy's resume? Where is he trained? He's saying something that's different from me. What's his background? And apparently, my member got back to me. He said, well, he doesn't have a LinkedIn profile. He claims he worked for an investment bank, but it really can't be back-checked. And even if he did work for an investment bank, at what capacity? Was he getting coffee for people, or was he a trader, or, exactly what did he do? So always check people out, and I am public. And I post my real trade statistics on the website. So we've had over a 90% success rate since we opened our doors at the end of 2015. And I think our annual return is somewhere around 49%. So that's really good for this business, and we have a great track record of success. So let's get into it. Now it's time to start the fun stuff. So today I'd like to talk about why option trading is the best form of investing, why new traders often have a false sense of options, the option strategy that results in the highest winning percentage, and how to find those winning trades. This is really the bread and butter of option trading. So why options? Why don't I invest in stocks, bonds, Forex, or some other type of investing? And that's very simple. It's because I like to make consistent profits. There's nothing wrong with these other forms of investing, but options done right continue to pay higher than any other type. The fact is, stocks, bonds, Forex, all of these markets are unpredictable, making them more about educated guessing versus investing. However, with options, there is an element of the pricing model which is very predictable. And when we execute an option strategy properly, we can continue to exploit this over and over again, which is why we end up with such a high success rate. And the sad part about it is most new option traders don't even know what this element is, which is why they continue to lose, which is why they don't know any better and continue to struggle with their option trading. Now, we'll get into this pricing element in a little bit, but for right now, I want you to understand that with the right option strategy, we don't have to predict where direction of the stock is going. Instead, we only have to have a good estimate of where the stock won't go. For example, if a stock is trading 100 and I think it's going to move higher, instead of buying the stock, what I can do is I can put on an option trade that says the stock won't trade down to 90, say within the next 45 days. So if it was a stock trade and we bought the stock at 100 and the stock traded, say, down to 95, we would lose. But if we do an option trade where we're saying the stock isn't going to trade down to 90 and the stock trades down to 95, we still win. And it's still a 100% win, which is why we can have such a high probability of success. So in this example, say we put on an option trade where we're saying the stock isn't going to trade down to 90, and when we do it, the stock is trading at 100. If the stock goes up to 105, we win. If it goes up to 103, we win. If it stays right at 100, we win, whereas before we would have broke even. If it trades down to 95 or 92, we still win. And that's really the secret to trading options with a high success rate. We get into situations that we feel the stock is going to trade higher, but then we place a option trade where we bet the stock won't trade below 90. and we continue to collect money on that when the stock moves in any direction. The fact is, most new option traders trade in the exact way, which causes them to lose trade after trade. And then they think option trading doesn't work and they get frustrated and quit. It does work. It's just the fact that most new option traders implement the exact wrong strategy. For example, a trade that a new option trader might make, let's say we take our same stock that's trading 100. New option traders often will buy a call option, say at the 105 strike price, which means that they're betting the stock is going to go over 105. And let's say the time frame is the next 45 days. I mean, from the very beginning, this type of trade is stacked against you. And if you place too many of these trades, you're going to get sour on options really fast. Because if we buy a stock that's 100 and it, let's say, it goes up to 103 and you bet it goes above 105, that's a loss. So these are low probability bets that you lose most of the time. And that is really the problem that most new option traders face. However, traders that implement options properly end up crushing average market returns over time because they just get win after win after win after win. And these small wins add up big over the course of a year and make people rich after several years. New investors have a false sense of options. They think options carry too much risk. Now, over the long run, options traded properly, I would argue, has far less risk than any other form of investment. But there has to be a balance between risk and reward. And the reason why we like options so much is options allow us to control that balance. For example, if you want to place an options bet where for every dollar you invest, you can make $5, you can do that with options. So you only invest $1, but you have the option to make $5. Now, that sounds pretty good. But what most new traders don't understand is that for every dollar you invest with the probability to make $5, that the market has deemed that you only have a 20% chance of success. So people are quick to sign up for that type of venture, but they fail to understand that the odds are stacked against them from the beginning. I mean, if you're getting 5-to-1 odds, then you don't have a very good chance to win. And if that's the type of investing you want to do, then you shouldn't be in options to begin with. You should go play the lottery. I mean, with the lottery, you can bet $1 and make $1 million. Or there's other games where you can bet $1 and make like 1,000. But that's not really the type of investing that ever pays off. The way we trade and the way other educated investors trade is they would rather invest $5 with the probability to make $1. The way we trade and the way other educated options traders trade is to invest $5 with the possibility of making $1. Now, a lot of new option traders are turned off to this type of investing because they're not making that much compared to what they're putting up. But what they fail to realize is when you make a bet like that, you have an 80% chance to win from the beginning. And then what we do is we mix this with quality research, and we only take on the investment situations that we think are going to win, which pushes our probability up even higher. And then we just win trade after trade after trade after trade. And we see the profits start to add up really quickly. Most new traders are turned off to this style of trading because they want to make a lot of money really fast. Instead of taking small win after small win, they want to just get one big win, which is a lot sexier. Now, that might be true, but the only thing that really matters is how much money is going to be in your pocket at the end of the day. I mean, the people that go after the huge win strategy never end up getting it. They end up blowing out, and then they conclude option trading doesn't work. It does work. They just implemented the wrong strategy. The way we trade and the way other successful option traders trade is to place many high probability of success trades and rack up many small wins that turn big profits over time. This way, we don't have to get lucky to win. We can rack up win after win, and it has nothing to do with luck. It's about educated, smart investing. So the right trade. What is the right trade? Well, it starts off with doing the proper research. You need to look at a company and understand what's about to happen and then put on the proper trade for the right situation. You then want to look at stocks that are liquid, and this means they trade more than 500,000 shares a day. And this is important because there's something in option pricing called slippage. And if there's not enough contracts traded per day, then the option pricing becomes wide. And what I mean by that is, say a company that trades 1 million shares a day, if the option is worth $2, the market maker will have a bid of $1.95 and an ask of $2.05. So that would be a 10-cent wide spread. Now, a company trades maybe 500,000 shares a day. It might have a little bit wider of a spread, not much, maybe 15, 20 cents wide. So you'd be like 185 at 205. But a company that has, say, 50,000 shares a day or 20,000 shares a day, these are going to be really wide markets. So if the value of the option was $2, it would be a $1 bid at $3. So you have to pay $3 for the option, and then if you want to sell it, you would have to sell it for $1. So those have a lot of slippage, and we want to avoid those situations. So when you're looking for companies to trade in, the first rule is make sure they have 500,000 more shares traded per day. So the next thing we want to look at is implied volatility. So this tells us if options are cheap or expensive. When implied volatility is high, the options have big price swings and they become costly. When implied volatility is low, this means that they trade at a more conservative pace and they become cheap. It's important to understand this because we don't want to buy anything when options are expensive and sell anything when options are cheap. And implied volatility is very predictable. This is the thing that we talked about before. We say it is the pricing element that is predictable. Because when implied volatility is high, it always comes back in. So in all situations when implied volatility is high, it'll eventually come back in and the prices of the options decrease. So let me give you an example. This is a website that I like called Camel, which measures price fluctuations in products on Amazon. So this is a graph of a power supply that I was thinking about buying. Now you may not realize this, but the products on Amazon, the prices change dramatically all the time. So here is a chart. We can see this power supply. It was like $200 a year ago. Then it dropped to $180, and then it shot back up to like $205, and then back down to $155. And we can see it had these wild movements. So many people bought it here at the top, and then it comes back down, and people buy it at the bottom. And then it kind of just moves along, going up and down, up and down. Now, if we get to the right side of the graph, we can see now this has become extremely volatile. So the price was at 210, and then it shoots down to 119, and then back up to 210, and then 119. And there's people buying at the top. You know, people don't look. They don't know that there was a price swing. And this is often very similar to new option traders. They don't know when options are expensive, so they go ahead and buy the top, while smart investors sell the top and then wait for it to come back in. I mean, we can't be in the market of buying and selling this power supply. But theoretically, if you could, it would be a good market to be in, right? When it's a 119, you buy it, wait for it to shoot back up to 210, sell it, sell more of them. When they come back down, buy the ones that you sold for 119. And that's pretty close to what we can do with options. So once we understand how implied volatility works and how it affects option pricing, we can take advantage of this by selling options when they're expensive and then waiting for implied volatility to come back down and level out, and then buy the position back, locking in the profit. And that's exactly what we do, and we do it over and over and over again. And this is the same strategy that competent option traders should be implementing. No matter if they're an institutional investor or a home trader, this is the strategy that works, and it will work for the long run, and it will allow you to make consistent profits over time. And this is really the main problem when it comes to option trading, because most home traders don't even know what implied volatility is or that it exists. So they're constantly buying options when they're expensive, much like this power supply. You know, they don't know that there's an ability to check whether options are cheap or expensive. So if you're going to be buying options, would you rather be buying them when they're expensive, or would you rather be buying them when they're cheap? When you're selling options, would you rather sell them when they're expensive, or would you rather sell them when they're cheap? Now, of course, it makes sense now, but you definitely want to be selling options when they're expensive. Wait for a volatility to get crushed, then you come back in and buy them, closing out the position. But people who don't know any better buy options when they're at the top, and then they can't figure out why they're not making any money, which technically is an investment strategy that was doomed from the start. So having the right strategy and knowing how to value options is the key to making sure you turn a profit at least 90% of the time. Unlike stock prices, implied volatility is very predictable. And once you know how to spot spikes and apply the appropriate trade for the conditions, trading suddenly becomes a whole lot easier. And we can do this over and over again. So here is a chart of the implied volatility for Biogen. And you can see there's spikes. It spikes up here, and then implied volatility drops. And then it spikes up again, and then implied volatility drops. And then it spikes up again, and then drops. And it'll continue to do this forever. So if I back up, so let's back up to here. So let's just say the option cost $2 here. So that would be the fair market value of the option price. So once implied volatility drops, this same option will have a value of, say, $1. So it could lose 50% of its value just in a couple weeks from this drop of implied volatility. And then it spikes back up here, say 190, so we would sell. And then when it drops back here, say 125, we buy it back. And then it spikes up here again to $2, we sell. And then when it drops back down here to 125, we buy it back. And we continue to do this over and over again. Now, of course, we still have to do the proper research and make sure that we're getting into a position that fits our strategy. But doing so properly will allow us to make profits and capitalize on these implied volatility changes. And also, we make even more money on time decay as well. So this is a strategy that will continue to pay month after month and year after year. So introducing Option Strategy Insider, where we have our whole system laid out at optionstrategyinsider.com. Where we not only provide the highest quality option training in the industry, we also provide our members with our own trades and complete research report along with each trade. And as a side note, if you're subscribing to any kind of stock research company, make sure that they give you complete research reports with any trade analysis, because you don't know how much research went into their trading analysis. They could be just like, here you go, here's a trade for you, but really no research went into it. When you view our trades, you get our recommendation of strategy along with the complete research behind it, so you know it's a good trade. So what are you going to learn? First, you're going to learn how options work, and that's everything from A to Z. Then, how to spot those winning trades. What exactly are we looking for, and what have we come up with that we think we can exploit and take advantage of? And then third, what are the best strategies and how to apply each one? Now, there's an unlimited amount of option strategies, but we concentrate on just a handful, maybe 5 or 6. And these are really the ones that are going to lead to the bulk of the income. So as a bonus, we consider implied volatility to be so important, we created a custom plugin which allows us, as well as our members, to rank implied volatilities. So we can see exactly which stocks have elevated implied volatility levels. This is key to finding the best stocks ready for us to take advantage of through options. We then teach our members how to sort and rank stocks based on extreme implied volatility levels. If you're going to take anything away from this, I hope you understand how important implied volatility is and how critical it is to do everything you can right when you're trading so you can put yourself in the best possible position to win. This doesn't mean just do 1 or 2 things right, but to do everything possible from start to finish to put yourself in the best possible position to win every trade. Because really, it's your money at risk. You want to protect your money and you want to do everything you can so that your savings can continue to grow. It starts with research, evaluating the market, assessing price levels through implied volatility, and then executing the right strategy based on the conditions. And if you do all these things properly, you'll be putting yourself in a very good position to profit with options right out of the gate. So what's all included? At OptionStrategyInsider.com, we provide our members with our complete option training videos on how to do all of this from A to Z. We include our own trades, which have over a 90% success rate. And we also include complete research reports and the logic behind every trade we do, which is very important, so you can see exactly how we evaluate a trade and how we make our moves. We also include our implied volatility plugin for locating those top trading situations. And we have a member forum, so if anybody has any questions or at any time or is confused about a certain topic, we answer those right away. And if that wasn't enough, we have discounted transaction fees. So we have a deal with TD Ameritrade, which allows our members to get big discounted pricing on every trade that they make. Now, transaction fees aren't a lot, but when you get them for a big discount, they're even cheaper, and that can pay off over the long run. Other companies provide similar services, and they charge over $5,000 for something like this. But you're not going to pay that. In fact, our own members get charged $2,400 a year. So you can go to our website right now and sign up for $2,400, but I'm not even going to charge you that if you're watching this webinar. You can sign up now for just $997. Just go to optionstrategiesinsider.com/special, and we have a special link there so you can get in for $997 a year. And this price isn't going to last long. I'm going to go ahead and pull this deal in 24 hours. You can still sign up. After that, you just have to get in for the regular price of $2,400. So for all interested parties, 24 hours for the price of $997, and you get the whole shebang. So I hope to see you in the members area.